Well, good day all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up, I'm late today. It's 7:10 p.m. I'm sorry. We're doing something with software. We're having changes in it, and it gave me a hard time, to put it mildly. It worked fine on one computer. The moment I put it on this one, it failed miserably. Brand new, they'll work that out tomorrow. I did a special report for everybody. So if you're looking at something like Lucid, I've been covering on my stock reports. I covered already Tesla. We've done Rivian. Now I'm doing tonight Fisker. And as a special report, I did Lucid. I picked on Lucid because it just got $3 billion literally today from the Saudis. They've already had $6 billion, so now the Saudis are in for $9 billion. They're going to be building factories in Saudi Arabia for new cars. Aston Martin joined them today, wanting to get drivetrains, gave them a couple of $100 million. The earnings numbers have not looked good, but they don't look good in Fisker. They don't look good in Rivian or any of these because they're new companies. Does that mean they're not going to make it? Well, that's the question. The guys that make it will have an interesting time in this auto market. Yes, it'll get crowded, but why do we just have to have GM and Ford and Mercedes and a Volvo? You can get some of these others up. They are neat cars. If you want to find out about it, want to take a look at the fundamentals, I do a weekly chart setup for you, daily. Go to stock reports on our website at iraepstein.com. No, you go to iraepstein.com under research. It'll drop down, you'll see it there, or you can click the icon here at any time. All right, so let's go back and take a look at what we've got. I can tell you this, that I think the markets are boring. Sideways action, not throwing out good buy chart action, I think, or sell action. Neither one. When we take a look at the S&P, we've been in a bit of a correction after that AI mania to the upside. You can see how the market is backing off ever so slightly here, but it's more than it looks like to the eye, and I'll prove this to you in a minute here. So the market's come now down from roughly the 4,500 level back to the 4,368 zone, and magically, it went right to the 18-day average and stopped the break. How often do you hear me say, markets that get over it like to pull back, and from that 18-day average, they try to figure out what they want to do next. That's the kind of market that you have right now. You still have a lower low, higher high with a correction, and you lost the embedded reading. And when you lose an embedded reading, what happens if you take my enhanced Bollinger Band course, it's under education on the website at iraepstein.com. You get this reading under 79. And I tell you, before the market gets back over that number, if it doesn't re-embed immediately, which would be the very next day, the odds favor price and the 18-day average are going to come together. Now they're not, you can't re-embed the next day. That's all I was looking for. So for me, the game now is neutral. Now I have to see what it wants to do next. You lost it in right here in the NASDAQ, and now you're back to the 18-day average. You lost it in the Dow. Right here. See what it did. And you lost it in the Russell. So you don't have to agree with what I teach you here, but I like it. It's neat. In the T-bond market, I said, I think we're going to go sideways and you're going to get churned in this. This is the thing to avoid because you try upside breakouts, downside ones. You don't seem to go anywhere and you spend more time at the 18-day average than you want to talk about. You have a lot of resistance in the 100-day average in the upper Bollinger Band above you, and you've already spent the energy where you're overbought. Any reading over 70 is overbought. In the 5-year notes, they're really caught between the 18-day average and the lower band, but they refuse to embed just a churning of money going on here without a real trend taking place. The dollar is recovering, lost its bearish embedded reading, so the challenge was to at least get to the closest main moving average. It did it last week. And now the market between here and the 18-day average is where the next battle comes in. Does the market want to embark on being bullish again, or from here develop bearish patterns against these two averages and roll over? It's too soon to know. In the eurocurrency, which way the dollar goes will be the other way that this currency goes. You lost your bullish embeddedness. The market's corrected. It already hit the downside target, the closest of the main moving averages. Might want to go to the 18, but it doesn't have to, and it's void of a trend. British pound, they raised interest rates 50 basis points. You had an embedded reading, you lost it. I think before you get up to these highs, you're going back to the 18-day average of closes. In Bitcoin, and I teach all this, these are in the courses that we have. You keep running the upper band. Now, we know that this is about BlackRock and Citadel stepping in, creating that ETF, giving the market a real bona fide group of people that are serious. And that added $5,000 last week to the price. I mean, that's pretty impressive. When we were down here, go back to the videos, I said, you know, if that's all they can do with knocking Binance out and Coinbase, it's not acting so bad. Trying to catch this pop, I'm not good enough to do it. I imagine there's somebody out there. I'm not the guy. When you look at Brent versus WTI, well, WTI still not holding up as well as it could because you see the differences widening out. In other words, Brent is stronger. You can see that Brent is back and forth here, void of a trend, sideways against the 18-day average of closes. Same thing in WTI, higher high and lower low. I wish I was coming on here and saying trend, bullish, bullish. I'm not. I'm saying in most markets, void of trend. Same in the gasoline market. I don't see a trend play there. Market stuck between the 200-day average and the gray, the green, the 100 and the 18-day average of closes. How do you make a prediction off of that? It's difficult. Natural gas. This has at least got heat going for it. You know, it's week after week in Texas, they're doing it. Now that heat's moving upward a bit. And if it will get into the upper Midwest and move across the country, you can get another whole leg out of this market. Keep your eye, see if it embeds, and if it does, then you can start playing the market for the moves that eventually might carry it. So one more time, if you're interested in our special stock report, move your cursor up here. You can go to iraepstein.com and underneath research, just give it a click. You'll be able to get the report. It's all about Lucid. You have a great day. I'll be Lucid, and I'll see you tomorrow.